Hello everyone, it is Friday, March 21, and today we will dive into the Euro and British pound charts to evaluate potential market shifts. As we can see, both European and British currencies are undergoing a correction against the US dollar. It appears traders are rethinking their earlier optimism. The expectation of 2 more Fed rate cuts this year may no longer be enough to keep betting on the dollar's weakness and buy risky assets. This bearish move was overdue, and the incoming data could only fuel a deeper correction. Take yesterday's data from the UK, for example. The claimant count change, a measure of those receiving unemployment-related benefits, jumped to 44,000 in February from 2,800 in January. While the unemployment rate itself remained steady, this rise in claims is a worrisome signal for the UK economy. At the same time, the Bank of England held interest rates unchanged at 4.5%, indicating a cautious stance. The bank's 9-member Monetary Policy Committee voted by a majority of 8 in favor of holding interest rates, while only one committee member voted to lower rates. Governor Andrew Bailey underscored that the economy remains under pressure, in part due to trade tariffs imposed by the Trump administration. He also emphasized that the fight against inflation is far from over, noting that the decline in inflationary pressures has been slow. This suggests that central bank will be careful about cutting interest rates. Against this backdrop, the British pound failed to find support and its correction continued. Today's calendar includes several macroeconomic releases, although none are expected to provide meaningful support for the risky currencies. In the Eurozone, markets will receive data on the European Central Bank's current account as well as the latest reading on consumer confidence. The UK is set to release data on public sector net borrowing and industrial trend orders. However, these reports are unlikely to change the broader narrative or offer significant tailwinds for the euro or British pound. As for statistics from the United States, the spotlight will be on a speech by New York Fed President John Williams, while the Federal Reserve's policy direction is fairly clear. Williams is not expected to give the market any new guidance. That said, in the absence of other major catalysts, his remarks could still spark short-term volatility, especially given today's relatively light macroeconomic calendar. Let's turn to the technical outlook. Diving into the 1-hour EUR USD chart. A drop below yesterday's low followed by a false breakout at 1.0806 could offer an opportunity to open long positions targeting a move towards 1.0856. In this area, sellers are likely to step in. A false breakout at 1.0856 would act as a sell signal, potentially dragging the euro down to 0.806. If the price breaks below this mark, the euro could plunge to 1.0770, potentially reaching 1.0743. At this level, I would recommend going long on a rebound, aiming for a 25-30 pip move. Long positions at 1.0770 and 1.0806 should be considered after a false breakout. In a bullish case scenario, a break above 0.856 would likely erase yesterday's losses, paving the way for a recovery towards 0.905. At this level, a short position on a false breakout would be reasonable. Going short on a rebound would be relevant at 1.0952, anticipating a potential 35-40 pip intraday correction. Speaking of the British pound, a false breakout at 1.2912 would serve as a buy signal, potentially lifting the GBP USD pair towards the resistance level of 29.46. If the price fails to break above this level, I would recommend going short on the false breakout, expecting an intraday correction of 29.12. A confirmed break and consolidation below 29.12 would open the path toward 28.76 and 28.41. At the 1.2841 mark, traders may consider going long on a rebound targeting a 25-30 move. Long positions at 1.2876 and 29.12 should only be considered following a false breakout. If selling pressure remains weak at 29.46, the British pound is likely to remain range-bound. In that case, I would look to go short at 1.2975 on a false breakout, or at 30.10 on a rebound, aiming for an intraday correction of 30-35 pips. Good luck and have a great weekend.